This is Arvin Talley with Elixir Mortgage Lending, and in this video I'm going to actually cover a lot as we're in the midst of the 2025 home buying season, and right now it's getting towards a little past the middle of June. I wanted to go over quite a bit. First, let's start off with if your home hasn't sold and you're in the market to buy another one. There are ways at least to get prepared where we can either use if you're in an offer already, maybe we have the transaction information. We can use that as whether it's going to be used for down payment or proof of funds to get you at least moving and started, so you're still in the midst of selling one and getting in another. Or if you have a ton of equity, your home is on the market, hasn't sold, we can either do a bridge or something fast that we can take the equity out for you to put a down payment on the next. So there are different ways to transition. Bridge tends to be the fastest. It's not necessarily the lowest rates or the best terms, but it's the fastest and you could get in and out quickly. And when you do need to get out, there isn't any prepayment penalty or anything like that, but it'll get the transaction done and swiftly. As far as what we're noticing or seeing, there are a lot of low down payment options. If you're a first-time home buyer, you can do 3%. If you're a veteran, you can do 0 down. If you are a subsequent homeowner, which means you're not a first-time home buyer or you haven't bought one in the last 3 years, you can get in with 5% unconventional. FHA, you can do it with 3.5% down. There are some low down options, but these low down payment options, the one part that is consistently happening is folks are saving up for these numbers, and then they come in to start a transaction and they're short on closing costs or they're not prepared for closing costs. Depending on the state you're in, we particularly lend in California and Florida majority of times for primary residents. Non-primary, we do more states. But in California or Florida, depending on what the state fees are, it's between 2 to 5% for closing is where you need to anticipate based on the state requirements, as well as third-party fees, lender fees, and the type of loan that you're doing. Some loans just cost more than others. Next, as far as down payment, if in case there are issues with down payment, there are a number of ways doing it. I'm not going to get into the real estate part and your agent negotiating those for you or having the seller pay for them. That part is not my department. But the part that is if we do a home evaluation and appraisal comes in higher and we have room, we can sometimes, with the agreement from the seller, tack on the closing cost. So that way, at least if you are short or don't have them or don't want to come up with them, it's tacked on to the price of the house, as opposed to you having to have them up and ready right now to close. So there are some options there depending on the circumstances. As far as these don't come up as often, but mixed use properties where they're part living, maybe part office, they're multi-use. Traditionally, these type of loans are more commercial loans. If you are not occupying the property, they're much easier to finance. If you're going to live in it, but maybe have like an office or some type of work environment within the building and it's coded that way as a mixed use, there are some options, which I'll get into shortly. As far as condos go, if you are using VA or FHA, these are the keywords that you want to do. You want to see if they are VA or FHA approved. You can go to HUD.gov and look them up. Otherwise, your agent will tell you. And warrantable or not warrantable, those are keywords. I'm not going to get too much into those, but those are keywords you want to look into if you are using an FHA or VA and you're shopping for condos. As far as there are three type of umbrella that we are using. Conventional, which is your jumbo conventional loan, FHA, VA loans that you need to qualify using income. Those are the conventional umbrellas that are used. Then there's soft money. For those of you who are self-employed, this category is higher rates than conventional, but they either don't require income, or if they do, it's in the sense of like maybe if you have cash flow, business cash flow, we can use cash flow, but there are stated programs within this. The rates are higher, the closing costs will be higher. It will require more down payment. These are not in the category of that no down to 5% down. These are going to be now in the category of 15%, some cases 10% to 25% down, depending on the loan. And if the client, for whatever reason, let me not make sure, for soft money, you do have to have higher credit score. So if we're not using income, you have to still be able to have a 660, 680 or higher at least. Most cases, even a 700 or plus credit to get into loans that have lesser income verification. Now, if your credit is harmed, you have a solid down or you have a really big down and you want to make an acquisition, you can use hard money. In California, in some cases, we can even use it for primary residence, but most cases at that point, they're going to be non-owner occupied. Hard money means maybe the credit is hurt, the property is like a beyond a one-off, or there is some obstacle, that whether it's income or something that is preventing you to go the soft money route or the conventional route. These type of terms are going to definitely be higher down payments. They're the highest of cost of all the loans, and they are going to be the highest of interest rate of all the loans. But they do have a purpose, and their purpose is they have lesser documentation. They can be faster closing terms, especially if you need to get something done yesterday. Now I'm going to get into pre-approval. If you are going out with a real estate agent and shopping, pre-approval is very important, because right now with interest rates being higher, home prices being higher, and knowing what you can afford and looking in the right category, it's best to have these. And depending on the umbrella of whether it's conventional loan and you're qualifying with income, or it's soft money loan, which is some type of cash flow, or you reserve amounts needed for the down payment, or hard money, which is going to be no income, there's going to be documentation differences. If you're asking, I'm going to go backwards this time. If you're asking for hard money, for example, initially, if I get you pre-approved, I may not even ask for a full application. I would ask for just proof of funds, knowing that you have the funds to be able to close this loan and have enough for the down payment. If I have that, I can probably get you pre-approved. That's the fastest, easiest one. The second one is soft money. Soft money, I would ask for an application, and initially I will not run your credit. I would even ask you to maybe go and whether it's Credit Karma or somewhere, if you can get a tri-merge, which is the three major bureaus, that's TransUnion, Experian, or Equifax, wonderful. If not, initially just one of your credit bureaus at very least, just to get a feel for if we're looking at the credit, the down payment criteria on the application to do soft money loan. And with soft money loan, if you are going to need to do it with cash flow, I would ask for 12 or 24 months bank statements to make sure we can qualify with that. If it's under conventional umbrella, that wants most documentation, which we're going to need proof of funds. I would ask for a credit report, some cases even run a credit application, and your income documents. If you're self-employed, we would need your taxes for the last 2 years. If you are a wage earner, we would need your most recent W-2s, taxes, and 30 days most recent pay stubs. And that way we can get you pre-approved. In the case, there is a lot, and it's not meant to overcomplicate things, but there is a lot getting started, and trying to make sure that we hit the umbrellas where whether you're going to be conventional, soft money, hard money approval, which category you're going to be in. Most cases are going to be conventional or soft money a lot more even these days. And basically getting everything buttoned up so your shopping experience is going to be better and you would have a better idea of what to expect. If you have any questions, feel free to reach us here at Elixir Mortgage Lending, and I am Arvin Talley. Thank you, and have a great time shopping in the summer of 2025.